keeping your data safe. Since our inception, we have trained thousands of participants among the investing public, financial professionals, hundreds of B2B clients, and have continued to forge strong business partners. To find out more about what we do and how we can help you, contact us today. Cybercode is a leading financial training provider and a leading developer of information technology solutions and management services.
The STI declined 3.5%, with dividend distributions marginally reducing the decline in total return to 3.4%. The 506 million Singapore dollar net institutional outflow from local stocks at the start of this month was driven by financials and industrials, which respectively booked 476 million Singapore dollars and 66 million Singapore dollars of net institutional outflow. ASEAN's most defensive performing sectors included healthcare, telecommunications, consumer non-cyclicals, energy, and utilities. The four-session trading week resulted in net institutional inflow for Singapore Telecommunications, StarHub, and Netlink NBN Trust, which led combined net inflow for the sector to 48.38 million Singapore dollars. Meanwhile, Singapore's utilities sector booked 7.1 million Singapore dollars of net institutional inflow over the four-session week, taking the sector's combined net institutional inflow over the first 6 sessions of August to 8.7 million Singapore dollars. On August 6, Sembcorp Industries reported 1HFY24 net profit before exceptional items of 532 million Singapore dollars. Scan or click the link in the description to learn more about these stocks or join SGX Invest on Telegram for the latest news update. Please note this is a general commentary of historical performance and not necessarily indicative of future performance. Check out our investment courses that are up to 70% subsidized at cyberquote.com/sg or contact us at support@cyberquote.com.sg.
The Institute of Banking and Finance, or IBF, was established to foster and develop the professional competencies of the financial sector. IBF is dedicated to empowering practitioners with capabilities to support the growth of the Asian financial industry. It is the national accreditation and certification agency for financial sector competency. Developed by the industry for the industry, IBF Standards is a set of competency standards benchmarked to international best practices. IBF's vision is to be the Asian standard of excellence for practitioners in finance. IBF Standards covers 13 industry segments and offers a wide range of development roadmaps. IBF Standards offers accredited programs to guide a financial practitioner from licensing examinations to professional certification. IBF Standards certifies financial practitioners at 3 levels. An IBF qualified individual is one who is equipped with a broad base of capabilities and foundational competencies to undertake new roles. An IBF advanced individual is one who has acquired applied knowledge and complex analytical skills for specialists or leadership functions. An IBF Fellow is an industry veteran who has demonstrated professional mastery and exemplifies thought leadership and commitment to industry. The IBF certification mark, a set of parallel elevation bars, symbolizes the close partnership between IBF and the industry. IBF certification is therefore an industry-endorsed mark of quality that recognizes individuals who exhibit professional excellence, integrity, and commitment to the industry. Be part of the IBF community of certified financial practitioners. Participate in continuing professional development programs. Avail yourself to learning resources to plan your career. There are also opportunities for mentoring and networking. IBF, the Asian standard of excellence for practitioners in finance.
Hi, a very good evening, ladies and gentlemen. Thank you for tuning in for this the Thursday evening webinar session of the webinar titled Finding the Resilient Stocks That Explode Upwards When the Uncertainty Clears by keynote speaker CKE, also the co-founder from Asia Chart and as well as one of the trainer who teaching IBF accredited course mastering explosive swing cross. So first thing first, thank you very much for joining in. And of course, we are quite happy to dive into today's topic, right? Finding the resilient stock that explode upwards when the uncertainty clears, right, by CK. Now, a little bit of some administration require all of you take note. So throughout this 2 hour plus session, we also connect it into Facebook Live, and of course, for those who join in via Zoom as well. If you do have any question, please feel free to post your question into the chat or in the Q&A, which is, I think, in the platform itself is shown. So as for us able to, especially if question for CK, definitely CK will provide you to reply. And if you're facing difficulty to post question, you also can visit there and we can actually reply you to rectify accordingly, right? Of course, also do allow me to do a short introduction of keynote speaker CK. Now, indeed, CK, he is a trader, just like a normal retail trader. Like he is not a license holder, a retail trader who are trading more than close to 30 years. So being a co-founder from Asia Chart, I think to the heydays that he has been conducting, also held more than 1,000 overs physical event, right? Which is basically have been invited by those overseas vendors like Metastock to provide his market insight and some software as well. Now, using the swing trading technique, in fact, he as an individual who also traded for more than 30 years, the knowledge of this of trading in psychology, he also imparted into his own trading as well. And therefore, today, this towards the end of the session, a 2-hour session, he also shared about one of the IBF course, which is actually very much that actually can help the, let's say, those who are finding the right strategy, especially in the trading, swing trading strategy. So CKE, he's the right person to able to share with you on that. Now, indeed, we want all of you here to make it more intuitive for the session. Of course, you raise the question is pertaining to the today topic as well, right? Of course, definitely our keynote speaker, CK will provide the reply, right? So of course, very much to learn from this 2-hour session. Do feel free to post your question during this 2-hour session. So I'll officially pass the mic over to CK to take over the session from here, right? CK, please.
Yeah, thank you, Andy, and welcome everyone to this evening webinar. Make sure you can hear me loud and clear. If there's anything at all, you can tell me in the chat box. I'll try my best to actually resolve if there's any technical issues. Huh? All right. Now, a lot of investors and traders actually told me they find the markets very difficult to understand, very confusing. If you just take a look at, for example, NVIDIA's, we have very good result, isn't it? But the stock didn't perform. How come like that? It's like that one. All right. So a lot of people actually tend to actually focus on something that is logical. And what happened was that actually logic doesn't work in the market. So there are a lot of people actually do not understand the core principles of good trading. And that's the reason why they tend to actually look for information. But in today's context itself, especially with social media, we actually experience information overload. And what happened was that when there are information overload, you just do not know what to do. And because of this is right. A lot of people actually learn a lot, but they do nothing. Today, I'm going to help you to actually make sense of the market. More importantly, how to find stocks that can explode. That's more important. Before I go further, I thought maybe it's good to let you know a little bit of my background. Now, who am I exactly? Like what Andy has mentioned, I'm just a retail investor, a private trader, very much like yourself. So I'm not a remiser, what they classify as license holder. So I'm not a remiser. So you don't trade with me. I'm not a fund manager. I don't collect money from you. I'm also not a prop trader. I still got to pay more commission when I trade. So I'm just a private trader. So whatever I share with you, I'm biased. Okay. Now, I began to seriously look at the market only in 1998. I started slightly earlier than that, but I left everything with my wife because it happens to be working in the bank. So remember, in the 90s, there's no internet, so information is real power. Informations are generally filtered, so it's quality information. So I thought it should be in good hand. I left it to my wife. So what happened was in 97, Asian financial crisis, she actually lost a lot of money. I couldn't sleep at night. So I asked her, what about the expert in the office? She said, expert also lost a lot of money. I said, how can that be? I mean, we depend on them to give us advice. And if they lose money, then what about us? So it was then in 1998, I decided that I should learn it myself, find as much as I can, all right, and not rely on anybody else. So that was something which I regretted because I actually missed the dot-com bubble because I was still learning. I regretted I didn't start earlier. And what happened was that when the bubble burst, I began to make money consistently by shorting the market. Now, this was quite unusual. Most people make money first by going long. I make money first by going short, right? And then in 2003 was simple because that was the beginning of a baby boom and I can recognize it. Now, if you know, it is not that difficult. What you need to do is turn off the news because the news is the one that actually make you very confused. Markets actually you can understand without having to resort to all those information out there. So I began to make money consistently. All right, thereafter. In 2006, I met two like-minded individuals and we set up this company called Asia Charts. The whole objective was to try to fill the gap in the industry in terms of quality education. There are a lot of educators out there, but a lot of people may not be telling you what trading is all about. So we decided to fill this gap in the industry. Together with my associate, we trained more than 10,000 students in Singapore, Malaysia, Indonesia, and Vietnam. Now, this is not to impress you, but to impress upon you, I've been around for quite some time. This is first time I got featured in Straits Times, August 2008. We don't offer get rich quick scheme, but leave our principle and teaching what real trading is all about. First thing first, we tell people upfront. Trading is a skill set. It's not a get rich quick scheme, which means what? Which means you got to invest a bit of effort, right? So it's really like anything you want to do well, right? You need to invest in some effort. So we are very upfront. We tell people it's not a get rich quick scheme. If your mindset is wrong, it can be very dangerous. Now, subsequently, I got featured again in Straits Times. This is half a page. I didn't pay a single cent for it. It is not advertisement. Reporter actually called me up, interviewed me, go to hotel, and take photo. And I still say the same thing to them. It's not a get rich quick scheme. People should not take it as a get rich quick scheme. Wrong mindset can be very dangerous. So we want to be a responsible educator, and we tell people upfront what really trading is all about. Subsequently, I got featured in Business Time, regional newspaper like Borneo Post, Xingzhou, and Dongfang. I was featured, all right, in a program in Channel News Asia a couple of years back. It's a 35 minutes program, and it was telecast 5 times. I was invited by Bloomberg to analyze the Shanghai market. I was invited by Thomson Reuters to do the keynote speaker event for them. And I also invited by Macquarie Research to do market outlook event for them. Now, these are big institutions. They have a lot of experts, but they still want my opinion. And it was extremely humbling experience to be invited by them. All right, so this is just a brief background about myself. So I hope you know where I'm coming from and the context. Huh? Now, when I first started at Times, I looked at this gentleman. His name is Warren Buffett. Everybody know him, thought to be the best investor in the world. And I discovered that actually Warren Buffett only made his fortune after past age of 60. So for a long while, he didn't really make money. It's only past age of 60. And he started investing in the market at age of 13. So I say, my God, all right, when I'm interested, I'm already way past that age. Now, there's something a bit different about his approach. His approach to investing is really a lifestyle. Right? It's not just a strategy per se, it's a lifestyle. And I realized that actually majority of Singapore may not find his lifestyle suitable. Don't get me wrong, you still can emulate him, but it's just that actually, based on my understanding, most Singaporeans will find it difficult to emulate his lifestyle. Remember, it is not a strategy per se, it's a lifestyle. This is a filthy rich man, but he lives like a poor man. Don't get me wrong, he's generous, he donated most of his wealth away. So in Singapore context, I find it very difficult because we make money, we still like to spend. Not because we love to spend, it's just we have no choice. I think to some extent, children education is extremely expensive, and our transport, in particular driving car, extremely expensive. So if you like to drive car, and you have children who have tuition and all those things, it's a very expensive thing for a normal Singaporean. So I find that his approach may not suit many Singaporeans. So I decided to move on and search. And I discovered this gentleman, his name is Ed Sukota, and a lot of people do not know him. He turned $5,000 to 50 million in 10 years. And that is 300,000% gain. I said, this is ridiculous. And nobody actually know about him. Right? He's not alone. This is Richard Dennis and William Eckert, done $400 to 200 million in 10 years. And that is 500,000% gain. Now, $400, everybody had 200 million in just 10 years. This is insane. Again, they are not alone. This is Michael Marcus, 250,000% gain in 10 years. And Cruz Goffner, one of the best hedge funds in the world, 87% gain per year for 10 straight years. Now, there's something common among these traders that actually excite me, that capture my attention. They make money without having to know what happened tomorrow. They make money without having to know what happened tomorrow. And that is what I love. All right. So I don't have to focus too much on the news. For example, like NVIDIA result. To me, actually, you don't need the result one. The stock cannot perform. You need some time. Not now. I'm not saying that you will never perform. Not immediate. For very obvious reason one. Despite the good result, you will still not perform. Even if you perform limited. And to us, it's very obvious. So you really do not have to go and study all those things. Don't need. The chart actually tell me so on. You know, if there's time later, I will share with you. But suffice to say, I love what this gentleman was doing because it makes things simple and practical. And this is what I want to actually share with you today. All right? As much as I can. Now, because of limited time, I want to quickly jump into it without making things complicating. Why market go up? Without making things complicating, market go up purely because money is flowing to the market. All right? Why market go down? Money is leaving. So basically, money is flowing in and out of the market, and it actually cause the price to go up and down. There are three major sources of money. First source of money, people saving, investing more. People like yourself, very thrifty, don't anyhow spend money, make money, save, and then what? You're going to buy share. First source of money. Second, people, institutions shifting money for other kind of investment. There are only a few major asset classes and money are just floating among them. If gold is no good, you sell gold, you buy stock. If bond is no good, you sell bond, buy stock. If property is no good, sell property, buy stock. So only few major asset classes. Okay. Third source of money, central bank, lower interest rate, increase money supply. Three major sources of money. Now, which do you think is the greatest source of money? Anybody? Anybody want to venture to try? Which do you think is the greatest source of money? Now, so if you have been reading the news, Federal Reserve, has been trying to actually cut interest rate. They're watching the inflation, things like that. Bank of Japan, not too long ago, increased interest rate. So you notice actually the central bank itself has a lot of influence. And the greatest source is definitely from the central bank. They click a few buttons, they print a lot of money. But the central banks do not print money and go to the stock market to buy share. They do not. I repeat, the central banks, their role is to control inflation and to ensure employment. They don't print money and go to the market to buy share. No, it is the smart institution. They take advantage of the cheap money provided by the central bank and go to the market to get better return. And because of this, we're interested in what the institution do with the cheap money. Because all these are shown in the chart. So just now you noticed the videos about the market update. You're talking about net institution inflow, outflow. These are the smart money. Okay, but remember, we call them smart money, but not all of them are smart. This is something you know. So remember, institution, okay, maybe intelligent but not smart. So we're interested in those that are smart. And as I mentioned, they're all shown in the chart. And later I will show you as well. Now, the next thing you must understand is market cycles, because by understanding this, save you a lot of trouble. Okay, market is always in an endless cycle. There are 4 stages of the cycle. Number 1 is basing. Number 2, advance. Number 3, distribution. Number 4, decline. It is always easier to look at the diagram. This is what we call basing, sideways move. This is advance. You can call it bull market if you wish to. This is distribution, again, a sideways move. And then this is a down market decline. Stage 4, and it go back to basing. 4 stages, spring, summer, autumn, winter, and go back to spring. And the cycle will just repeat. Now, the next cycle could be longer, could be shorter, could be taller, could be shorter, doesn't matter. It is always in the endless cycle. More importantly, never stay in 1 and 3. 1 and 3 don't stay there. It's a waste of time. But a lot of people like to do that. There are reasons. If there are time, again, I will explain. Now, stage 2, go long. This is to buy. Long is not long-term. Long is to buy. Stage 2, buy. Stage 4, you sell short. Is it okay? Stage 2, buy. Stage 4, sell short. If you do not know how to sell short, stay cash, don't buy. Okay? Let's take a look at S&P 500. This is 203, basing stage. Stage 1, stage 2, 4.5 year super bull. Stage 3, stage 4, subprime crisis. Finally, actually form a base, March 2009, clear stage 1, go stage 2. Now let's continue from here. This is stage 2. Stage 3, this is not too long ago, 2022, 2023, stage 4. All right, so in the bear market not too long ago, and finally it normalized, trade sideways, stage 1 and stage 2. So right now we are in stage 2. So recently there's a severe sell down and people got freaked out and we have a bounce. Now more likely what? You will continue to trade like this for a couple of swing before you move up again. This is Nikkei 225, stage 2, stage 3. All right, this is the COVID. This is a black swan. This is not a bear market exactly. So here we have stage 2 and stage 3 again, and then stage 2. And here we have real reaction, but generally we are at most stage 3. All right. So it's not yet in stage 4. This is STI, stage 2, and we have been trading sideways, stage 3. Notice we have a recent run up. This is where all the bank run, and we have also this reaction and bounce off. Okay, so by and large, we still have the rising. In case you're wondering what is this line, this is the 40-week simple moving average. So this has been what happens, all right, in the markets. As far as S&P, Nikkei 225, and STI, you can do that for any other market. All right, suffice to say, just to summarize, market is always in the endless cycles, and whether it's up or down, leaping of money, or in other words, liquidity. It is a liquidity that drives the market up or down. Okay, so don't need to go and focus economy, trade, other things, don't need. How to position yourself? Next, ask yourself. All right, you must understand the big picture because a lot of people do not understand this. And they get themselves very wrong. Once you get yourself wrong, sometimes you cannot recover. You only recover, you have luck. So next thing, how to position yourself? Having understood the key concept. Ask yourself this question currently, is your investment backed by a sound strategy? Do you have a strategy? If you have a strategy, are you truthful to your strategy? Or you hop from strategy to strategy? Or if you don't even know the strategy, what is its purpose? Some people may use a training system, but they don't know what's the objectives and the purpose. No? There are. I came across so many. They don't know what's the objectives of the training system that they have, which is actually quite dangerous if you do not know. Because if you don't know where you're going, any road is the right road. Is it correct? Heard before? No? If you don't know where you're going, right, any road is the right road. Now, in today's context, because of social media, is internet, you are flooded with all sorts of information, right? So a lot of tips, a lot of recommendation, right? So today you follow A, followed by B, followed by C, followed by D. And then what happened? If you go every direction, at the end of the day, you have nothing to show. And because of this, right, 95% of investors actually lose money over time. This is bad news, but good news for you. 5% make money because 5% make hell a lot from 95% for whatever reason, just love to give it to them. And trust me, there are a lot of people out there very happy to contribute. You just make sure that you're not one of them. Is it okay? So make a commitment. Be that 5, be the top 10% that make money consistently. Just help you to understand a little bit about this. Now, generally, the bottom 50% are the compulsive gambler. These are the people no chance one. They won't listen one. They are also not interested to learn one. Okay? They are just gambler. The next 40%, make some, lose some, make some, lose some. Now, some of these people already attended many courses. They use some system, but they are no discipline. In fact, they don't even understand whether they are aligned with the training system. They don't even know this. They can attend a lot of courses, no. But unfortunately, there are a lot of gap in those courses, as I already mentioned. So they are struggling, and some people can be here for decades. It is only the top 10% they are consistent winner, and you want to be here. All right, people who are here is not likely to be in this room because they are gambler. They are not interested in attending webinar. All right, so a lot of people stuck here, and I know. I coach fund manager. I coach reminder. And I'm very surprised the fund managers do not understand core principle. I do one-to-one coachings to some fund managers before. And I was surprised when they told me they are fund manager. I said, my God, how can you ever be fund manager? So many of them become fund managers because of paper qualification. Oh, that is serious. So remember this, you want to get out here and into here. Okay? Over here, these are the people who always last for what? Tips. They cannot make it one. Because tip is based on pure faith. It's not consistent, man. Right? But a lot of people there, they like to do this. Right? And these are the people I know, they are just gambling only. So you want to be here, make a commitment to be there. So next thing, where should we actually look at? Where should we be focusing? Give you a clue. If you look at this diagram, what comes to your mind? Anybody? When you look at a diagram, what comes to your mind? Now you tell me motion, you're right. You tell me momentum, you're right. Right? You tell me movement, you're right. So generally focus on those stocks that can move. And those stocks can move is because of what? Institution participation. All right. Certain stocks don't move, right? Because there's no institution participation. Now, if there's no institution participation, it will just never move. Maybe it moved down, institution participation, but they're selling. Huh? So focus on momentum, focus on movement. Now, why momentum work? An object motion stay in motion. When the institution buy a company share, they don't buy one time one. They don't show hand. They just acquire slowly. And because they continue to acquire, it continues to stay in motion. Clear with this? Huh? Number two, stock tend to move in the line of least resistance. Just like a car, it's easy for a car to move forward than to stop and reverse, because to reverse need a lot of energy. Next thing, before there's a change in price, there must be a change in momentum. Now, everybody is interested in the change in price. But before there's a change in price, there must be a change in momentum. This must come first. So it becomes pretty obvious why I'm interested in momentum. So that give me a clue. Now let's take a look at some stock. Now I like to show you stock from the past right to the present, especially the past. Why? Because you can relate better. Why? Because you probably have experienced, not yourself personally, your friend who have actually got themselves burned, got themselves hurt by participating in some of these past leader. So the whole objective of showing you this is one thing. You need to be flexible. Don't fall in love with stock. Don't fall in love with stock. Why? Because you can look back yourself. Huh? The greatest losses that you suffer come from your favorite stock. You ask yourself, is it true? The losses that you suffer, the greatest loss that you suffer, come from your favorite stock. And because of this, I need you to get detached. I'd like to show you some example. Costco. Momentum work. 4.5 years went up 8,000%. What happened to Costco? Gone. AAM. Momentum work. What happened to AAM? Gone. I'm sure you're familiar with AAM, right? It's gone. Tencent. Momentum work. This is Tencent again. Momentum still work, whether up or down. Positive momentum, negative momentum down. Don't go and buy, no. They're better stock than this. Huh? But a lot of people will ask me, can I buy Tencent? Can I buy Alibaba? There are no potential. Why no potential? Money is not flowing in. Why money is not flowing in? I do not know. You can ask the institution why they don't buy. It's beyond us. We are just lone individual. Don't need to go and find out one. The chart can tell you they are not interested. If you're not interested, why are you so interested? Does it make sense to you? All right, let's continue. Why momentum work? Natural bias to strong stock. A very natural bias to strong stock. Now, when the institution buy a company share, they're interested in earning. More importantly, they're interested in earning momentum. They're interested in earning growth. This quarter must be a lot better than the previous quarter. The next quarter must be a lot better than the present quarter. Now, remember, market is forward-looking. They're not interested in the past. They're interested in future. Is future is going to make a lot of money now compared to now. They want double-digit growth at least. If not, they'll move on to another stock. They are very brutal. So they're interested in what? Earning momentum. If you're making money, that's not good enough. Huh? Now, the technical trader are also interested in momentum, but they're more interested in price momentum. Is it okay? Price momentum. Now, you find it difficult to understand, right? Let me give you a very simple example. If you go to a hawker center, which you have never been before, and you're looking for good food, what would you do? Assuming you have time. Anybody? Assuming, all right, you're looking for good food at a hawker center, but you have never been to this hawker center before? How can you tell? How can you actually look for good food? Pretty obvious. Everybody got this experience, isn't it? You look at the longest queue. So in this case, the longest queue happened to be fish soup. You love fish soup, you queue. If you don't like fish soup, go for the second longest queue. And you generally end up with very good food. Now, after you finish your food, there are 100 stores here. You can interview the individual storeholder. How you come up with this recipe, how you actually source your ingredient, how you make your sauce. You can go and ask all these questions. This is called fundamental analysis. Don't get me wrong. I'm not against people doing fundamental analysis. I only know one thing. We can never do better fundamental analysis than the institution. Is it correct? Because institution has a lot of resources, a lot of manpower. They can call up the CEO, ask for an interview. They can fly overseas to visit the factory. Can you do that as a lone individual? You can't. You don't have the kind of resources. You don't have the kind of time. But there's something we can do as a retail investor. We can see what the institution do with their research itself, because all these are reflected in the chart. So we save a lot of trouble. Is it okay? All right. So what you need to do is that look at those few stores with the longest queue. The queue represent what? Institution sponsorship. You are interested in a lot of money flowing into that particular store. Institution sponsorship. Just look at a few stores. The rest of the stock with no queue, forget about them. Don't waste your time. Is it okay? So simplify the process. Next thing, why momentum works. Participate in strong sector in different part of economy cycle. Now, if you're in the market long enough, you realize there's this thing called sector rotation. Now, very obvious example, during COVID, healthcare stock was the strongest. Together with tech stock. Is it correct? Yes, they are strong. We are confined to our home, we communicate with technology. Very strong. Then after the COVID crisis, what happened to the healthcare stock? Gone. The healthcare stock gone. All right. Tech stock still actually considered, after the bear market itself recovered because of AI. All right. And people go crazy with AI. So there is this theme that's going on right now. Just like in the past, you have the EV theme. So people go crazy with EV. Now EV is gone. Okay. So if you participate in a strong sector, then what happened? You got highest return in a shorter time. So that's the reason why focus on momentum, how you do what? Save up the strong stock in a strong sector. So in order to look for stock that have momentums, you look at the market leader. I call them the champion stock. Now, a lot of people know the 80-20 rules, but they do not know that you apply to the financial market. In any market, Singapore, Malaysia, Hong Kong, US, is the same thing. 20% of the stock capture 80% again. In any market, there are only a few large winners. Don't bother about this one here. But a lot of people like to trade stock here. No? I don't know why. And a lot of people also like to trade stock here. I guess because it's cheap. That's why they like to trade. That's the reason why people ask me about Alibaba. They ask me about Tencent because it's a lot cheaper compared to before. This is a very dangerous way of thinking. So because of this, a lot of people actually do not understand. They actually contribute a lot, man. It contribute a lot, seriously, to the market. And not only this, they continue to contribute. That's the funny thing. That's the funny thing. So as I mentioned, we need to be very open. We need to be very open. Trade what you see, not what you think. Why champion stocks? Number one, quick momentum for short-term trading. When the institution move in, they cause ripple. This ripple allows us to do short-term trading. Price position over time for mid-term investing. How is this so? Stock with a greater short-term momentum evolve into a longer term. When the institution buy, it causes ripple. When they continue to buy, the ripple form wave. The wave allow you to do short-term investing. Is it okay? All right. And because you can do it consistently, it allow you to do compounding. So that is the reason why we actually look at leaders. Again, let me show you for the past right to present, and you can relate to your own situation. Relate to your own situation. This is Ezon. In 2013, it started to run 700%. What happened to Ezon? Gone. It's on the other side of the curve already. This is Oxley 2004. Company introduced shoebox apartment. It go crazy, 245%. What happened to Oxley? Gone. This is InnoValue 2015 went up 350%. Now, each company is so good, taken private by competitors, so we can't see already. Huh? This is 2016 CMC Gold Mine went up 2 months only, 178. This is a time where Bank of Japan introduced negative interest rate. Central Bank of Europe also introduced negative interest rate, and people go crazy with gold, and this gold mine stock rallied. Now, recently we have gold rallied, but this stock did not perform. It was struggling, it moved up a little bit. So trade what you see, not what you think. All right. SunPower. A lot of people don't believe a name called SunPower can run. In 2017, 120%. Likewise, Chinese Sunsing. Best performing stock, 118%, 2018. A lot of people don't believe that this stock can run. This is Global Evacoms, 2019, almost 300%. This is 2020. COVID, this stock went up 1,600%. Do you trade Mantech? A lot of people say, I never heard before. I did not trade. 2021 Grand Venture, this stock outperformed AEM. AEM was a great performer, but it actually overtook by Grand Venture. 2021, 300%. Yang Zijiang, this is not too long ago, all right, 95%. And 2023, which is just last year, best performing stock, Dynamic, 75%. Important, ask yourself, did you capture any of the stock? Ask yourself, look back. Ask yourself, do you capture any of these stocks? Because these are the ones that actually outlier. These are the ones that generate most of the return. Did you participate in any of them? A lot of people tell me I did not, because I never heard before. I already told you, you need to be flexible. Because, again, relate to your own situation, you understand better. Your greater loss comes from your favorite stock. Think about it. The greatest loss you have comes from your favorite stock. And some people are still holding your favorite stock, hoping that it will recover. Am I right? It is a fact. I trained more than 10,000 students. All right? Plus those free workshops, if I consider them together, I've easily trained more than 20,000. I got students all across the world. In some of the places I've never been before. For example, Guyana. I have a student from Guyana. When he told me from Guyana, I was surprised. I said, I never heard of this country. Then finally I remember, hey, Guyana, I think the place beside Venezuela. I got Russian student, Japanese student, Egypt student, Dubai student. I've never been to Egypt. Right? One fine day, maybe I'll try. All right. I have another student, most unusual, Kazakhstan. Yes, I got student, Kazakhstan. Let's continue. Now again, I do this is to draw lesson so that you can understand better. 2017, these are the leaders. AEM 400%, IP 270, Align Mineral 265, Sunrise 155, Elysis 132, UMS 117. STI not too bad, 11.2. Now I want you to take a look at this few stock. Where do they belong to? You realize these are tech stock. These are semicon stock. The only odd one is Align Mineral. You notice there are only 6 stocks here. 5 of them all from the same group, no. Same sector. Do you participate in any of them? If you do not, then there's something missing about your way you select stock. You're not selecting the leader, which give you the maximum return. Take a look. This is the broad market, 11.2. Take a look at the individual stock. These are few 100%. No. The difference between this and the big broad market is staggering. Can you see the difference? Let's continue. 2019, you have Global Eagle 300%, you have Rest International 272, AEM 145, Banking 139, Franklin 134, High P 73, and STI is pathetic 3.2. Take a look at the difference. The difference is staggering. Take a look at these 3 stocks. Same sector. All right, you got to be participating in this stock. Okay, now the rest are all on its own merit. Penguin, Rex, Oil stock. This stock is also gone. Global Eagle Telecommunication. Let's continue. This is something you're familiar with. This is the COVID year. Mantech 1004, UG 1003, Qtian is 600, Topgrid 300, Riverstone 269, iFast 259, STI is down 18%. Is it very bad? Yes. Take a look, 1,000 over percent. The difference between this and this, huge. Take a look at this 4 stock, Mentec, UG, Healthcare, Top Go, Riverstone. Same sector. Do you participate in this sector? A lot of people miss. Why? Never heard of Mentec, never heard of UG Healthcare. Dare not trade. Is this the situation? Ask yourself, because you got to relate to your own situation. Otherwise, you'll continue to do what you've done before. Then the result will not improve. Okay? Now, help me to remember best performing stock, Mentec. If you wish to take a photo of this, later I want to show you more. I want to do more case study because you learn the best from case study and from participation. All right, but because this is virtual, so this case study is important to help you to anchor your understanding. Okay, so if you wish to, you can take a photo of this. Help me to remember the best performing stock when we have a crisis. Market was down almost 20%, but we have stock went up 1,000 over, and the best one is Mentec. Let's continue. 2021, Southern Alliance 175 up to April. iFast 124, Fortress 100, Del Monte 73, Honeywell 71, Innotech 67, SPH 63. STI is not too bad. Second best after Taiwan, 30%. Now, why I stopped in April, I want to highlight this to you. This is after COVID recovery team. These two stock, iron ore, recovery. A lot of construction stop. After the COVID, during the recovery, right, a lot of construction must continue, ramp up, and they require steel. And iron ore is the raw materials for making steel, and they run. Do you trade Southern Alliance? A lot of people dare not trade, right? Do you trade Fortune? A lot of them I never heard before. Again, you miss. Okay, so we detected this. Now, I'd like to actually start with April also to highlight SPH, our best performing stock. Best performing blue chip. Can you believe that SPH is best performing blue chip? SPH, everybody know, fundamentally not strong. Am I right? Readership have been dropping, but fundamentally strong. This is something it is easy to verify on. Best performing blue chip. All right. Again, help me to remember. I'd like to show you more. Grand Ventures 2021 end of the year. Grand Venture, I've taken AEM, Mentec, Hourglass, iFast, Southern Alliance still there, Samudara, PropNet, STI is 9.1. Fast forward, 2022. Yang Zhejiang 95, Semcorp 69, Keppel 42, Bestwell 40, Jardine 38, CDL 25, UOB 14, STI 4.1. Now take a look at this. Take a look. Where do these 6 stock belongs? Anybody? Where does this 6 stock belongs to? Something to do with color. It belongs to a group of stock. Generally, people love one. Something to do with color of the sky. It may give you a hint. Can anybody tell me what stock are these? Color of the sky. No taker? There's so many people in the room. Wrong answer, no punishment one. Anybody want to try? Thank you, Raymond. Blue chips. Yeah, blue chips. Take a look. Blue chips, 6 of them. Take a look. The 30 blue chips, 4.1. There are 30 component stocks. 30, 6 of them. Look at the performance. If you buy the wrong blue chip, your return is only at best 4.1. Hopefully, it's not negative. Your return collectively is only 4.1. If you are able to find these 6 blue chip, your return is a lot different. I want you to remember this. All right? Bestwell, Semcorp. Take a look, Bestwell. Bestwell was suspended for 3 years. It only started trading in October 2022. Only the 3 months. It chopped up 40%. Do you trade or not? Do you trade? A lot of people are too fearful. You have too many opinions. That's why you dare not trade. Tell me, anybody here trade Bestwell? It only start trading in October. Suspended for 3 years. A lot of people did take advantage. And this one, power, in 3 months, he chopped up 40% gain. Let's move forward. This is just last year only. Dynamic 75, Food Empire 63, Semcorp 56, Keppel Corp 55, iFast 53, Lincoln 42, Dow fee 39, STI negative no. Last year is negative no. Help me to remember this now. You remember these blue chip, they are actually leading. All right, Food Empires, a A lot of people don't believe it can perform. Remember, these are leaders, 2028, last year only, because later I will show you something. Just to help you to understand and appreciate this is Hong Kong stock last year, best performing. Take a look at the list of names. A lot of people say, I've never seen that before. I can understand. Because you only talk that you know, right? You only trade stock you like. But what you like doesn't mean you put money. So a lot of people actually miss. This is S&P 500 last year. Beside this one, and this one, the rest stock. Beside these three, the rest tech stock. Right? But right now, tax is not the one leading, no. Right? Up to date, based on just July, this is August now, up to July, the best performing stock is still NVIDIA. The rest of them are no longer tech stock. Again, they got chance, I'll show you. So a lot of people only fall in love with certain stock and they refuse to actually just let go. Next, what is a good training system? How are we going to approach? What is our methodology? Now we're going to drill down. First, I give you the big picture, the forest. Now we go down to the tree. Now I created a very unique methodology. It is called expectation investing or expectation trading. Embedded within the strategy is this concept called expectation trading. What is expectation trading? Expectation trading or expectation investing means I must have the answer before the market open. Answer to the following question. Number one, before the market open, I must know which stock to buy. I must know beforehand. I must know at what price to buy. Is it $1? Is it $1.50? Is it $2? I also must know how much to buy. Part of risk management. I also must know if I'm wrong, how much is my loss. I know my risk exposure. Okay, I don't overtrade. And lastly, I must know when to get up. I must have all this answer before the market open. Now, if you have all this answer before the market open, how do you feel? Ladies and gentlemen, if you have all this answer before the market open, how do you feel? You're calm, confident, and composed. Some people say, is this possible? Yes, I'll show you later on. After we enter the market, we look for two actions. Number one, when to buy some more when you're right. And next, when to get out with profit. This is called expectation trading. I must have the answer before the market open. And after I enter the market, I must look for these two actions. Okay? Now, I just explained to you how. I have not explained you the why, which is more important. Why? Why do you think I do expectation investing or expectation trading? You see, before you enter the market, you have all control. You can choose which stock to buy, at what price to buy, how many shares to buy, you have control. But once you enter the market, most lose all control. Market take over. The only control you have left is to get out. But to get out is not easy. Most people refuse to get out when they are wrong. Is it correct? Again, relate to your own situation. You derive more benefit. So, before you enter, you have all control. After you enter, you lose almost all control. The only control you have left is get out. Because of this, you suffer psychological discomfort. And these two monsters will rear their head, fear and uncertainty. And because of this, a lot of people lose money. Why? If you make decision for the state of fear, if you make decision for the state of uncertainty, it cannot be sound. I don't care how intelligent you are. If you make a decision for the state of fear, for the state of uncertainty, it cannot be sound. And that is the reason why a lot of people lose money without understanding. Okay? The whole objective of doing expectation investing is to minimize this. You cannot eliminate, but we want to minimize this. You're calm, confident, composed. Is it okay? Now, let me drill down further. So we're going to trade the momentums, capturing the explosive move. That is our focus. 3 approaches, but in the interest of time, I'll discuss 2, reaction swing and momentum swing. Now, not all stock can do this. Only the champion stock can do this. Why? Because these are institution action. Now, whoever bought a stock earlier has a tendency to take quick profit. This is the human weakness. Whoever bought a stock many years ago and noticed the stock start to move also decided to actually get out. And because of this, there is reaction, reaction, reaction. All right. So market have this thing called the action, reaction, reaction, action, reaction, action, reaction, action, reaction, action, reaction, action. So we're interested in the action, upward move, not a sideways move. And this move, don't think it's small. This move itself is 40 cents. 40 cents. You buy 20 lots, that is 8,000, which is above the median salary of an executive in Singapore. Very obvious reaction, action, reaction, action, reaction, action, reaction, action. This move one day, 10 cents. 20 lot, 2,000 in a day. Right? You don't need to be active. You must know what you're doing. You need to be proactive. Very obvious reaction, action, reaction, action. And this type of move, sometimes you can move for 20 bar, which is 1 month. And it's huge. So ultimately, end of the day, if you're able to exploit this type of move, your return is going to be huge, especially through compounding. Oh, I don't have to focus too much on the screen, you know. I'm very busy. It's okay. Do the swing on weekly chart. Same thing. 1 week, 1 bar, very slow. Reaction, action, reaction, action. And you can hold it for months, right? But remember, weekly chart is slow. It may suit individuals who are very busy, who don't want to look at the screen too close. It's all right. It's okay. All right, you can do that one, no problem. This is Sembcorp, one of the best performing stock. Action, reaction, reaction, action, reaction, action. This stock run for 3 years and right now it's gone. Don't fall in love with stocks. Remember, this was a champion stock. It's gone. Don't fall in love. Next, I'd like to discuss momentum swing. Momentum comes from motion. All right, over here, we see motion, we position ourselves, then buy here and we buy on breakout. Some people say, why you don't buy here? You buy here, by the time you reach here, you make money. Our objective is to buy at the right price, where the risk is the lowest, but the odd is the highest. The chance is better. All right? And the right price very often is not a low price, and low price very often is the wrong price. But a lot of people like the low price. Now, if you like the low price, for example, here is a low price, right? We don't have high side. We don't have high side. Is this low? Yes. So you bought the stocks. You go sideways, nothing happened. One fine day you go down, what happened? Here, your objective is to make profit. Am I right? Here, what's your objective? Your objective change. You're no longer interested in profit. You're interested in no loss. Is it correct? So what happened when the stock go to a break-even point? You get out. After you get out, market seem to not run without you. Anybody got this type of experience? Before you sell, your stock don't run. After you have sold, the stock run like mad without you. Anybody encounter this very often? They don't understand the psychology behind. They just succumb themselves to it and they're using logic. You just have to remember, if you think normally in the market, you are losing money already. Okay? If you think normally, because the thinking go to trading and thinking go to your job and study are different. Don't mix them up. Most people don't understand this. They mix them up. Let's continue. I purposely highlight this stock because you can relate to them better. This is Olam. So, oh, CK so old. Yes. If you remember better, you learn better. Olam was shut down by a company called Muddy Water. Muddy is a short-only fund. They claim that the company has not been transparent in the way they recognize their profit. So every other day, very bad news. And what happened? The price collapsed. One fine day, you were doing this, and I noticed this, and I noticed that the volume is picking up. I position myself here on breakout, I buy. I have no idea it's going to gap up. That was a bonus. Are you able to see the volume? This the institution. They move in. Why they move in? I have no idea. Answer come later. Temasek announced there are a lot of funds into this company to rescue the company. And Muddy Water had to scramble to cover the short position and it go crazy, run up. Ask yourself, if every other day you will receive negative news about Olam, would you buy the company share? You won't, right? Because you are just too much influenced by the news. I already told you, I trade what I see, I don't trade what I think. And do not trade history. Whatever you know is already too late. Let's continue. To make sure you understand, this is Ezone. Look at the right side of the chart. Right side of the chart. Are you able to see the right side of the chart here? Is there movement? Is there motion? Yes or no? Now, if you don't see, you actually type in the chat box because I want you to learn as much as you can. All right? That's provided you let me know whether you encounter issue or not. So on the right side, are you able to see motion? Are you able to see the gap here? Always remember the general rule of thumb. If there's a gap, trade in the direction of the gap. So in this case, we have a gap up, trade in the direction of gap, or breakout, I buy. Here we have a gap, I stand by, but nothing happened, I didn't trade. Again, our objective is to buy where the risk is the lowest, but the odd is the highest. Is it okay? Buying here, I will not be wasting time buying here. That's 2 months plus. I will only buy here. Save time, and the stop close at 148. 30-cent move, 20 lot, 6,000. 6,000 is more than an executive medium salary in Singapore. So these are extra income. Don't need to be active. Just need to be proactive. Some put $300,000 fixed deposit and they only make small money. All right. Hong Leong Asia, strong inbound trend here, breakup buying. Start here the high 3, 12, 40, 40%. Now this is a $2-3 share. All right. 4 day 40%. Hell a lot, no. 1 day 10%. 4 day, no. Now by this time, a lot of people say, but CK, I also know. Buy here, sell here. I also know. Buy here, sell here. I also know. Here, don't buy, don't sell. I also know. Anybody thinking like this, with the high side, all very clever, right? With the historical chart, all very clever, right? From here onward, I want to show you stock from the past right to the present for one simple reason. I train day in, day out, year in, year out, and very important, I know the answer before the market open. This is called expectation trading. Now let's take a look at this stock. Let's go high P. Here we have a gap breaker. If you know the stock to buy and the price to buy, what can you do? Let's say assuming you know the stocks to buy is called high P and you buy only when it breaks 75 cents, you know the answer already before the market. What can you do? You refer Remiser. Remiser, if it breaks 75 cents, buy 20 lot for me. You can use stop limit order to automatically execute the trade when it hit 75 cents. You can set alert, email alert, pop-up alert, SMS alert. You can, right? If you know the answer beforehand, and this is exactly what I do. I set alert, SMS alert. I know the answer is high P. I'm interested when it breaks 75 cents. I know the answer on the 20th July. And 20th July is right here. This is 1920. So on this day, 20th July, I know the answer to buy is high P when it breaks 75 cents. So I waited 1, 2, 3, 4, 5, 6, 7, 8. On the 2nd of August, 9:56, I received this alert and I checked. Oh, there's a gap. Oh, the volume picked up. I buy. Stock closed at 86 cents. This is a 15% move. I purposely highlight this stock to you because this is the first entry, this is the second entry, this is the third entry, this is the fourth entry. By the time I reach here, a lot of people say very expensive, very risky. Anybody got problem buying a high price? Anybody in this room has problem buying high price? Anybody? Because if there are, I can help you. Nobody in this room got problem buying a high price? According to research, 80% of people cannot buy high price. 80%. All right. And that's huge, no? The number is huge. So can you understand why people got problem? They end up buying the wrong thing. All right. Now, in case you are just too very shy to admit, it's okay. I help you. I still help you. Assuming you bought a stock at $1, this is you. And assuming your friend bought the same stock at $1, this is your friend. You bought a stock here, you make money. Your friend bought a stock here, you lose money. Why? Same stock, same price. Why you make money, your friend lose money? Never mind. You let your friend buy 50 cents. Your friend still lose money. You let your friend buy 30 cents. Your friend still lose money. On the other hand, instead of $1, you buy 150, you make money. You buy 180, you make money. You buy $2, you still can make money. You bought the stock a lot more expensive than your friend, yet your friend cannot make money. You still can make money. Why? Straight away, you know it's nothing to do with price. Am I right? Ask yourself, is it correct? Is it a fair statement? It's nothing to do with price, right? Isn't it? Your friend bought a lot cheaper, cannot make money. No, you bought a lot more expensive, you make money. So nothing to do with price. Don't focus on price. Focus on the direction of price. You just have to do the switch, the seismic switch. If you don't move the seismic shift, you continue to do the wrong thing. Don't focus on price, focus where the price going. Don't focus on price, focus on the direction of price. Is it okay? Let's continue. I got a lot of stuff I need to clear. All right. Here we have high P on a different year, and I signed my alert 73 cents on the 12th of February, and it triggered 3 days later on the 15th right here, and the stock exploded. All right. 1, 2, 3, 4, 5, sell. Why sell? Because $1 is a psychology reason. Why sell? Because every day there's a gap, there's a gap, there's a gap. Cannot sustain, it's a bubble. Why sell? Because Singapore control the 5 day. 1, 2, 4, 5. About time. There are 5 reasons. I have given you 3. P. As trader exhaustion, every day there's a gap, there's a gap, there's a gap, cannot sustain. Psychological resistance at $1. So there's convenient place to take profit, and time exit because contra 5 days. Now 4 days. Even in US, there's no contra, but you need to be aware of the 5-day cycle. On the 5th day after breakout, you need to be aware in case there's severe people, a lot of people take profit, it may have reactions. Some people say, CK, how come no indicator one? Don't need one. How come no MACD, CCI, stochastic RS? Don't need. I only trade like that. The most I put moving average, that's all. Because I trade the psychology behind the bar. All right? And for 1,000 years, this is OSIM. I purposely highlight OSIM. Before I go for it, anybody, are you able to hear me loud and clear? Okay? Anybody? Everybody can hear me clearly? I just want to make sure. Okay. Now, I purposely highlight OSIM because too many people came to my office at that time asking for help, and they can do. They lose a lot of money. When I say a lot, it's a lot though. 6-figure one. When a lot, it's a lot. I'm not going to talk about a few thousand, few ten. No. More than 100,000 one. And it's not a few, a lot. And it's ingrained in my head. Why they like these stocks? Because they like the product, they like the leadership, they like the founder. They think it's solid. To me, it's very simple. There's a gap here. I mentioned before, there's a gap. Trade in the direction of gap for me is to short. I set my alert 267, all right? And I know the answer on the 1st September. It triggered on the 4th, 3 days later. Here I short and the stop plunge. And over here, I cover my position. This is an exhaustion move, very huge gap. Exhaustion move, first boom bar, I get out, 37%. All right, where I get out, as I mentioned, this is exhaustion move. And this gap here is too huge. I call it a power gap. Gone already. And eventually it consolidate and then it plunge again, break $1. Break all the way. Solid company, but lousy stock. To me, very obvious. You cannot buy one. You only can sell short, but a lot of people lose money, no? Especially those focused on fundamental or loan. They think this is good bargain, and they got delisted. All right, Ronsin take it private. They lose tons of money. I don't think they can ever recover the kind of losses. Just one stock only, no? They can never recover. It's taken private. Gone, no chance even hold long term. SMRT. I purposely highlight this one because you can remember better. In 2015, SMRT services, good or no good? How is their service? Can you remember? Service good or no good? Junk, every other day breakdown, and they were fined heavily by LTA. Now, if every other day news is so bad, would you go and buy the company share? Ask yourself, would you buy the company share? A lot of people will not buy right now. Let's take a look. I received an alert 165 and to long, 20th November. It triggered 2 months later, 22nd. I almost forgotten. That was an alert that I have forgotten. But anyway, when I received the alert, I take a look. My God, the volume picked up. See the volume? I buy. Tell me, if you receive negative news every other day about a company, service lousy, CEO resign, you tell me, would you buy the company share? Honestly, would you buy the company? A lot of people will not buy. I buy. And you move up. Now, you can see the volume. Huge. Huge. Something is cooking. Answer come later. LTA announced bought over the SF or SMRT. Is that good news? Yes. By the time they announce the news, the move is over. Who are the people buying before that? Before the announcement? People who know. Maybe LTA officer, maybe SMRT officer. I don't know. I speculate only. I just trade what I see. And over here, I get out. This bar here. I get out. Why I get out? Shift in sentiment. So that's the reason I get out. Right? If you don't get out, you can return a lot of profit. This is venture. I set my alert 1669 on the 14th. It triggered next day, 15, right here. All right, go all the way up, and over here, I sold my position, 33%. How can you tell that the move has ended after a strong move? Is this a strong move? For those people who do candlestick, is this a solid candle? Ladies and gentlemen, I'm sure there are people here who do candlestick, right? Don't tell me don't have. Right? Anybody here do candlestick? Is it a solid candle? A lot of people cannot understand this. To me, it's over. I get out. Why? Institutions are selling. So I get out. This is Hong Kong stock Ping An. $91, 17th of January, I set my alert. It triggered next day, 18. Let me share with you, and this is the trigger. Let me share with you, this is what happened. This is a resistance. There was a test. This is a second test, and there was a gap. So because of this break, there was a jog, a reaction. So how can you tell? Small body. So this is uncertain. So I do not know. I set the alert at the high of the bar. That was $91. And it actually triggered the next day. I go long on the 18. And the stock actually hit at this level here. When you retrace, I get up $98. How can you tell that the move I come to an end? How can you tell it come to an end? Because there's uncertainty. That's why I get out. If I don't get out, I can return all my profit. You see that? All right. This is a very obvious one. SIA Engineering. This is COVID. Huh? I know the answer, 270. All right. SIA Engineering to short 24th. And I put $2 sign, which is important. It triggered 4 days later. Here, I short the stock. And the stock plunge. To me, very obvious one. Because COVID, aeroplane cannot take off. Don't need to maintain, right? So SIA Engineering show very jialat one. So I short the stock. And over here, I cover at the support. 45%. Good or no good? This is very easy, you know. During COVID, you didn't short and make money a bit wasted. Because it's too obvious. It's not just Singapore. It's worldwide phenomenon. You must understand. It's worldwide. Let's continue. Mentec. This is COVID, no? 29 cents. All right. Check long. 15 June. I know the answer. When it triggered, 18, 3 days later. Here. Stock exploded. Over here. Close. 87. Get up. 200%. Can you help me to remember this alert SMS? If you wish to, take a photograph. All this SMS alert from telco, no, I cannot fabricate one. No. There's no way you can fabricate it from telco. No. All right. Okay, let's continue. This is Fuyao Glass. Now, all these charts, right, is purposely curated so that I can draw the lesson for you to understand. All right. I could have shown you a lot, but I want to draw those very unique ones. All right. And then to be able to actually draw the lesson for you to understand. Now, let's take a look. This is 42.45. Huh? Okay. Check long, 29 December. It triggered when? 31st. 31st, which is what? Last day of the year. New Year Eve. So when it triggered, the time is here. This bar. Take a look at the volume. Volume very low. On the 31st of December, it triggered, volume was very low. So I wasn't prepared to take the trade in case of forced breakup because volume cannot be so low. Now remember, it's a half the day. Even if I multiply by 2, it's still very low. So I buy only the next trading day, which is this bar. I buy. So I buy not this bar, but this bar. And finally, over here, when the stock was not able to make another high, I get out. Why? Because there's abnormally already. I get out. Clear with this? So you want to avoid false breakout. This is something you got to think note of. I just now mentioned SPH, nobody wanted to trade on. I trade. Take a look. This is my alert 129 back long, 25th of February, right here. Trigger next day, 26, right here. Stop move up, pull back, did not hit my stop loss, finally recover, and here I get up, 196. Some people say, oh, I need to get up to man, you don't suffer this gap down, man. Because to get up, this is 50% run, because to get up, I also set alert, 196 going down, check, 16 April. I put 3 hex sign, this is danger. And all those warning sign is in capital one, capital letter one. All right, so I know on the 16th, I prepare. On the 19th, it triggered. So on the 19th, I sold my position. So nothing to do with these two wide range reversal bar, nothing to do with this gap down. Did anybody trade SPH at that time? A lot of people didn't trade. Why? Fundamentally no good. To me, very obvious. Answer come later. What happened to SPH now? Delisted, taken private already. So they got a lifeline. That's the reason why it run. Okay. Sembcorp, one of the best performing stock, run for 3 years, now gone already. Huh? I set alert 203, 3rd January, trigger 4th, right here. Next day only trigger, exploded. And here I get up. That is 46%. Again, to get out, I set alert also. Notice the capital letter, watch to take profit 13 April. I take profit 19 right here. All right, there are some additional info, test upper channel line. So if you can, you notice this is what happened, upper channel line. So you touch the upper channel line here, I draw a bit slanter, I get out. Notice over here, there was another attempt, fail. Very obvious, this is a sign of weakness. If you don't get out here, better get out here before you break the trend line. So to get in, to get out, I have prepared. I already mentioned, best word, a lot of people don't trade. This is where I trade. Can you see this 215? It is called a small dipper. Check long, add position. So I actually have position, I add some more. 20th January, right here, stock exploded. And I also have alert to get out. C253 test high volume resistance. High volume resistance. When I know, 26. When I get out, 6 February. And after I get out, I have no idea. This is an 18% move. It went down. I have no idea it's going to sell so badly. I just know that actually it's time to get out. Why? Because this is a high volume resistance, not ordinary resistance, high volume. Anybody have any questions so far? Best performing stock. Do you trade Dynamic? 41 cents. Break, run. Yeah. 585. This is 42%. Do you trade this? This is this year. This year. So we achieved 2 things. I repeat, we know which stock to buy, which stock to sell short, precise entry price, or before market open. So if you know the answer before the market open, you're calm, confident, and composed. And this is exactly what we do. Is it okay? So some people will say, so what if I know? A lot different. Let me just show you some example from the past to now. Now, all this email, I never solicit one. I don't have to do such things. I know there are people out there because I'm in industry long enough. They find ways to get people to give them testimonial. In fact, some of them, they pay for it. To me, I was damn annoyed. There are people like this, all right? But unfortunately, it's just unfortunate, all right? If you're in the industry, then you'll know. And this is what I do not like to see. And that's the reason why we first set up the company. The objective is to fill the gap in terms of quality education. So this I actually sent to me. I did not solicit. I did not ask for it. This is by Patrick Ho, 2008. You'll be wondering, wow, CK so long ago. I do this for this one. Tell me 2008, is it bull or is it bear? Pretty obvious. Subprime crisis, bear market. The subprime crisis is worse than the COVID crisis. Because the subprime crisis involved the financial industry. I can tell you, the government also don't have so much money. All right? COVID, a lot of governments are prepared to pump in, like Singapore government, pump in to help the economy. But in a subprime crisis, it's the banking industry that got problem, and a bubble has just burst, the property bubble. That is very serious. These two sectors is very serious if they burst. So at that time, it's more worrisome. Now, remember, bear market, huh? Thank you email. And when we want the worst market sell down, I receive a thank you email. I'm not shorted the market. I came in forward in a trading composition with a return more than 200%. That more than 200% is more than 200,000. I'll hire Patrico for three simple reasons. Number one, he's a retiree, 61-year-old retiree. All right. He only start to learn only when he retired. Number two, he has not shorted in his entire. This is the first time shorting. I guide. All right. In my coaching, I guide them. And number three, he actually entered composition. All right. And made more than 200,000. Now, the last reason, when he learned that time, he learned quietly from us without informing his son. Of course, you'll be wondering, why must get permission from the son? He's a 61-year-old man. Because the son is a fund manager. He listened to the son, cannot make money. So he decided not to listen to the son anymore, and he don't want to offend the son. He came quietly and learned from us. And during the subprime crisis, he made more than 200,000. He appeared in my office without announcing, and he said, CK, I want to buy a lunch. And after, during the lunch, he told us the son is a fund manager. We almost choked, man. Now, good news, very good control, right? Eventually, he told the son about it. The son couldn't believe it. Come and my office and asked me a lot of questions. And finally, he became my student. And I look at his name card. My God, CPA, MBA, CFA, one string of degree, but just cannot make money. Father make money, but he, with all the qualification, cannot make money. All right, so eventually came and learned from us, became our student. Let's move on. Now, I'd like to show you the gentleman because this is one of my best students. And he's a seminar junkie. So you probably already seen him because he probably attend all the workshops in Singapore. Practically all the workshops in Singapore. And you probably see him before. That's why I want to show you. His name is Kenny Lim Chi Kun. Now, Kenny actually sent me an email 3 years after attending the course. This is 2014, and he wrote his email, I attend back in 2011, 3 years. Based on HSR principle, written pretty decent. All right. So in that 3 years, he enclosed 4 spreadsheets. The last one is actually an IGL account I opened in June, focus on short. So total 4 spreadsheets. First year, he makes 77,000. Okay, now. On the second year, he happens to make 29,000. On the third year, he made 32,000. And there was another account for shorting. He actually made 13,000. So about 50,000. So that 3 year, he made 153,000. He started with a capital 100,000. That's 153%. 1 year before the COVID, he came to my office, giving me cake, bring me mooncake, and bid me farewell. Migrated to Australia. And he told me in 1 year, he made 2 times his annual salary. This guy is a senior executive. So I think he made probably 200,000 a year as a senior executive. So 2 times his annual means he made 400,000 trading. So can you understand why eventually he decided to become a full-time trader? All right. Or migrate. Right. So what happened was that he was so serious. He aspired to become a full-time trader. And that's the reason why he attended many, many workshops, many, many seminars to see which are the style that suit him best and whether which one can help him to make money. And they're very happy that he actually made money using our strategy. Fast forward, lousy year, 2020, COVID year, Cynthia wrote to me, I'm currently sitting at some profitable shop, example, Sembcorp Industry. The RST here, but he only give me one example. That means he got a few stocks, example only one. He was asking about trading stop loss or willing to capture bigger profit. I reply her, got it, CK, thank you for the reply. Really glad I attended our course last year. Got to experience current market, armed with useful knowledge and technique of selling. And I'm very happy for her. She eventually got a sister to attend our course as well. Now, a lot of people do not repair the roof on sunny day. They try to repair the roof on rainy day. It's too late. And this lady repaired the roof on sunny day. Last year, before the bear market. All right. And that's why he was able to take advantage when the market sell down. Let's continue. She is not alone. This is Sarah. September 2002, COVID year. On a personal note, I want to extend the deepest gratitude to you. Wow, this is a very strong word. And this is around that inspired me to help my student more. In my 2 months in the broking firm, I don't mention the name, I block it out. I make 70,000. Take a look at the last statement. I never use this I never felt this gratified. I never used this approach in the past. She's a fund manager. She was a fund manager. He quit the fund manager to become a prop trader in a broking firm, and he joined the broking firm only 2 months, he makes 70,000. So happy he sent me this message. Never felt this gratified. Fund manager, no, cannot make money. Decided to actually become a prop traders in the broking firm. And I was very happy for her. Now, all this is possible because of this program called Mastering Explosive Swing. Now, in this program, I'm going to teach you capture the short-term explosive move and ride the leader for outside gain. This is medium term. This is cash flow, and this is capital appreciation. And we achieve this through the market leader according to the champion stock. See, okay? In the program itself, I'm going to teach you how to find the champion stock for long and for short. A lot of people very sorry. Can short the champion stock, man? Can. Time is just right, not too early, not too late. Timing is important, no, because it affects your psychology. Trade setup before the breakout. If you understand the setup, you understand the breakout. We don't just randomly trade breakout there. You must understand the setup there. So I'm going to teach you the setup so that you know the answer beforehand. Remember, this is called expectation trading. 3 critical number you must know before you enter position. If you don't have this number, you are just gambling only. How to ride the champion stock for outside gain. When you're right, you want to be damn right. Don't sell too early. The system is comprehensive because you capture both short-term and medium-term. All right, and practical, simple. I make it practical. You don't have to focus too many things. Require some time. I cut down the times required to do homework. Now, let me do a quick demo. All right. Now, I'm using these charts here. This charting software belongs to Share Investor Station. Okay. Now, this happens with the software that I use. One of the software. You can use any software. Why? Because we don't use any indicators. That's all. The most I put moving average. So any software will have all this simple thing, right? So these are the markets: Singapore, Malaysia, and US. You have 4 folder. All right. You have in Thailand, you have Indonesia, Hong Kong. Let's look at Singapore. Look for this folder. So I put my strategy into this software. Swing. This is all swing. All right. You notice you have daily charts and weekly one reports. So I just look at. So this is for longer term now, weekly. So this is daily long. Daily long. Now take a look at the reports. 29th of August, which is today. Take a look at the time, 18:30, 6:30. So 1.5 hours after market close, the report is generated. Okay, so these are the stock we are interested. All right, these are the stock we are interested. And if you notice, there's a column here called the alert price. So these are the alert price where we're going to trigger and we're going to buy. Let's take a look at Hong Kong Asia. So this is Hong Kong Asia. So Hong Kong Asia right now, I have a setup. I have a setup. So if you break 815, I'm going to buy. And I know the answer now. In case tomorrow breakout, tomorrow is Friday. Maybe next Monday breakout, I don't know. But I know the answer now. If you know the answer now, are you very stressed? Are you very stressed? How can you be stressed? I already know the answer. I already mentioned this is called expectation trading. We know the answer before the market open. All right. So let's take another example. This is Lam Cheong. All right. So Lam Cheong here, alert price 335. So I know that alert price is 335. All right. So when I stop break 335, I'm going to buy. 335 is here. All right. So I know the answer beforehand. Let me give you a very simple illustration from the recent past so you can appreciate, understand a little bit better. Take a look at this report. This report is 28th of August. 28 is, when is that? When is today? Yesterday. So this is yesterday report, and we have a stock called Hong Kong Land, and the price is 375. We know yesterday, 375, Hong Kong Land. So this is Hong Kong Land, and we know the answer yesterday. This is yesterday, right? 28, and 375 is here. All right, so we stand by to buy. Yesterday. Did you break? Yes. And for us, there's a template to help to make your life simple. So what you need to do is just plot the swing template. So if you notice, you plot the swing template where there's a breakout, there's an arrow. Here we have a previous breakout, there's an arrow. So I already know the answer. And today, breakout. We know the answer, in this case, 1 day in advance. All right? Let me show you more so you can appreciate a little bit better. This is one of the strongest stocks, isn't it? Beside the bank stocks, this is Singtel. Take a look at the date. This is 25th of June. Remember 25th of June? What's the low price? 266. 266, 25th June. Huh? So this is Singtel. And we know the answer on the 25th of June. Where is 25th of June? This is 24th. This is 25th. All right, over here. All right, 25th of June, and it's 266. 266 is here. This level here, 266. Okay, so you notice I have the answer here, 25th of June, 266. And it broke out the next day. It broke out the next day. All right, so I know the answer 1 day in advance. Now, in case you miss, right, no issue. In case you miss, so you notice we have another report, which is 9th of June, Singtel 290. Just take note again, Singtel 290. When was that? 9th of July. 9th of July. What is 9th of July? This is here, 9, isn't it? Look at the yellow box. This is the date, 9th of July. 9th of July. All right. And here the answer is what? 290. 290 is here, isn't it? And then what happened? Next day, breakout. So I know the answer in advance, at least 1 day in advance. So I'm calm, confident, and composed. And let me just put in again the template. So you notice there's a trigger, all right? This is the trigger, all right? Notice over here, there's a trigger also. Yeah, you also a trigger. This one is dividend, all right? So it's a sideways move, So this is one of the best performing stock. See the trigger? So are you able to find this champion stock? A lot of people have difficulty. Now remember, I just showed you, I have the answer before the market open. So we are calm, confident, and composed. Now, you don't stop there. No? Let me just show you. This is how we support. So this is my website, srtrader.com member. You go to member, you come to this portion. Now, every day, I'll do a video for my student. Let me just show you a sample of the videos. So you look like this. Okay, let me just show you something that I did in the past, 28th of March. Now it's August, 28th of March. It's not high side, I did a video there. You can see, best world also. This is the video, this best world. This is how we train, best world. Let's continue, 28, Samudra, mapping out a very nice consolidation pattern. So this is something you would like to actually observe closely. I warn the student, watch closely. Notice after the attempt at this resistance, there's a pullback on lower volume. So I'd like to see if we actually take out this 785. So notice this pattern, remember this pattern, all right, break this line, okay? I mentioned very clearly. I'm going to show you. All right, because what happened was that the stock has actually given bonus and all those things, so it's adjusted, okay? But please remember the pattern. So I did that at the time. I told the student, all right, this is the one. And I told them, watch what closely. Yeah. So it's not high side. So I did a video and I told them, watch closely. And let me just show you in case you have not taken note of it. When do I say 28th of March? 28th of March. And when is 28th of March? Here, 28th of March. Next day it trigger and it run. Don't fall in love with stock because this stock went down already. All right. So here we trade all the way up. All right. So I use this to actually guide the students. And not too long ago, we had very strong move, right? Isn't it? Our STI run very well, right? And it was driven by Singtel. And what other stock? Anybody can tell me? There were 3 stocks that were running together with Singtel that drive the index up. Now, talk, everybody can talk. 7th of March. Now, 7th of March, I did a video and I told the student that you must watch this. And this is extremely important. This is 686. Let's take a look at the 3 bank stocks. Mentioned previously that actually the 3 bank stocks actually map out very obvious consolidation patterns. It is quite evident to look at weekly. On the daily charts, it's probably quite messy. All right, so take a look at the weekly charts. So this is what happened. Now, after this attempt break, there's a pullback. Look for decisive break above this high here, 34.26. Very clear. Remember this pattern. Remember this black color bar. I tell them to buy when they break this. So remember what I told them when? March. Now let's take a look. DBS. Let me draw those things for you to see. This is where I draw. This is what I draw. All right. Now, take a look at this line. I mentioned about this bar. Break this to go and buy. And this is what happened. Can you see? I did the videos here. It broke and it ran. It broke and it ran. Now, this run is $10, no? Including $1 dividend. So you buy 2 lot only, how much you make? This move is $10, no? Including $1 dividends. All right? $10. You buy 2 lots, how much you make? Anybody? I don't think it's very difficult to calculate. Huh? You make 20,000. No? Very modest. No? You buy only 20 lots. No? Now, I mentioned that not now. Now this stock is gone already. Don't need to see it earlier. When did I mention? March 7. Now, in case you think that's all, let me just show you. Huh? Week. OCBC. Again, you map out a consolidation patterns. All right, look for decisive break above this high here, which is at 1345. Very clear. Break this. Remember this bar. After this black color bar, break. OCBC. Here. Run. Did anybody make money from the banks? And I told the system very long time ago. All right, don't waste time. Now, I would like to show you something. This is March, right? This is March, right? I want to show you the most recent video, 22nd August. When is 22nd August? Last week. Observe to see whether it can be taken up convincingly, and this is 93 cents. iFast do have very obvious overhead resistance. Hong Kong Land Hong Kong Land. Just now I show you the setup for Hong Kong Land, isn't it? The report, huh? This is significant because actually this is a resistance level that was actually taken out, followed by this pullback. Now today is actually 3x div, but it managed to actually, if you add back the dividends, actually positive. All right. Like to see eventually take out this high here of 361. 361. Here, 361 is here. Can you see that? 360, 361. When I did the video, all right, it was 22nd of August, which is here, this with a long tail. Right? Can you see this? It broke 2 days later. So let me just show you a video again. Can you see that? All right. So this is not high side. It's done. And I just now show you the reports. I would like to show you this report for this. Here. The report here. 361. Just now I show you the report was for the recent breakout, which is for this breakout. Isn't it? All right. Now I show you this for this breakout. This is the report. So we know the answer beforehand. All right. So this is not high side. 361. This is exactly what I say in the video. All right. Let me continue. So was it a good week this week? Ladies and gentlemen, was it a good week this week? You're very shy, huh? I realize. Oh, very shy, huh? Centurion. Very nice break with a gap, pullback, small dippers, but unfortunately the breakout is not very convincing. So I would like to actually see eventually move up above this level here of 675, above 675 convincingly. 675, huh? See, this is what happened. I did a video here, isn't it? All right. On the 22nd. On the 22nd, right? Isn't it? Yeah, 22nd. All right. And then why clear convenient? And it did. And right now it's doing this. So this is not high side, no? This is not high side. So a lot of things actually we know beforehand, we are prepared. Now, if it don't perform, then forget about it. All right. For example, this is sets. All right. And this is where we actually traded. Okay. And the game, when you break up this way. All right. You can see the posting here this way. And there's a video, 5 minute 55. 5 minute 55. Let's see, 5 minute 55. We have sets trade extension bar yesterday. Breakout very nicely after the release of result. By and large, actually, this is not a very nice consolidation patterns. It's quite messy. I like this. This is nice. But managed to actually break through this resistance and followed by a pullback. So the rabbit has set up. Bar high here is at 360. Now you just had so very clear 360 and it's called a rabbit setup. Be clear. All right. Now you pause. So was it a good week, ladies and gentlemen? So we actually know the answer before him. Now very quickly. S&P 500, same. You have this swing report. You got daily and weekly. This is the long report. So this is the S&P 500. All right. And these are the stock detected. All right, for us to trade. For example, this first stock here, Avia. All right. So this is a stocks and the ease is set up. And right now, notice this stock has a few set up already. and it was detected. This is a small dipper setup. All right. So you can see straight away, you can see builder. This is CBRE. All right, which is your real estate, no? And there is a setup. All right. So you take a look. Salesforce, Doctors, Norton, Davita. All right, these are the stock detected, and there is a setup. This was a construction setup. Extra Space. Again, these are relating to what? Property. The property must be doing well. Extra Space, and there is a setup. In this case, it's a Big Dipper setup. Okay, Iron Mountain. I'm not too sure if you're familiar with stock like this, not Iron Mountain. It's one of the best performing stock. Can you see the way it runs? Better than tech stock, right? Isn't it? All right. There is a setup. This is called a Big Dipper setup. So it can go down. All right. 3M. See? After the huge gap up here, and you still got set up. Now, look further down. You have eBay. You have NVIDIA. All right. NVIDIA's a bit of struggle. Despite good result, not much reaction, but there is a setup. I think it will be difficult. All right. So the better stock are the stock which I mentioned earlier. NVIDIA's probably got difficulty because of this overhead resistance. So suffice to say, actually, all the stock got potential one are listed here. Even your PayPal also have potential. All right. Even your Costco wholesale. These are retail, no consumer. All right. Yeah, better potential. Take a look at the way it runs. And for those people who prefer to look at the longer term, this is the weekly chart. You find your weekly setup. Isn't it much stronger? Slightly to pull back, look for setup here. So you realize it doesn't matter which market. We select the champion stock only. And after a while, you'll probably make your life a lot easier without having to resort looking at all sorts of things. Save a lot of trouble. Make yourself light. Now, just now I asked you to remember the name of the stocks, a particular medical stock that during COVID in Singapore, it run the best, run like mad. Can you remember the name of the stock? Start with M. Can somebody help me out? There was this medical stock in Singapore, they run 1000%, but the stock actually dropped like nothing. Can you remember the medical stock? Start with M. Anybody here? Can you help me out? Wow, serious. Are you all there? You got so many people in the room. Can you remember that? Thank you so much. At least you can remember. This is Chin Heng, for Chin Heng, for your surname, Chin Heng. Thank you so much for responding. Talk, everybody can talk. I'd like to show you something. This is the video I did at the time for a student. Mentec 17th of June 2020. A lot of people.
Mentec had quite similar patterns as Riverstone's run-ups, and right now it's just hugging below the resistance level. Like to see break above the high here of 29 cents.
29 cents. That was the alert I asked you to take photo. It is not high side, I did a video, break out the next day. This move is 200%. All right, move is over. We wait for the next setup, 30th July.
Let's take a look at Mentec. This is by far the best performing stock this year in terms of percentage gain. Notice this is what I mean by a sharp collapse in price, and usually tend to trade sideways, very much like what we have seen here. Right, but right now it's actually attempting at this resistance here. If you can pull back from here, that'll be good, and eventually take a short at this recent high here of 965.
It's very clear, precise entry price. 7 August, just before National Day, there's another setup.
Mentec, this stock has run ahead and is experiencing pullback the last 2 sessions. Again, it would be good if you can just trade sideways closer to daylight and eventually look for a break on the upside above the high of 105. Important if you can stay above $1, which is a psychological resistance.
It's very clear. What's the reason? Why must be above $1? This is how the stock actually traded after the debrief video. So this move is 100%. So this stock actually has a total 3 trades and the total return 1,600%. in the market where everybody was actually losing money. So right now you can see we have the answer beforehand. This is called expectation trading. And then with the coaching and the video and the support, you can see why so many students are so happy. In fact, one of the students posted in the forum before, he called the video the 4D video. I said, this is not 4D, this is for you to learn. You must see what I see. If you don't see what I see, you ask. You say, CK, but every week I make money, like try 4D. Like. Now, I'm very happy for this gentleman. He was actually a teacher. He actually resigned as a teacher to just teach part-time as a tutor. That's all, private tuition, so that he can trade more actively. And he actually sent me a message before. He makes 700,000 and was very happy for him. He said, I can financially free because I'm single. I got no car, no girlfriend. Just like that, 700,000. I'm more than happy. And he actually quit the job. Just do tutoring and that's all. Not tutoring, and he just trade most of the time. Now let's take a look at some feedbacks we received. And again, I want to help you to appreciate, understand. This is Yu Boon Huan. Yu Boon Huan wrote this. I wish I come in 10 years ago, pay CK 3 times the tuition fee. Why you want to pay me so much? Because you get back 100 times from the market. Okay. Now this is Olive Chen. Now a lot of people always say, oh, I'm too old to learn. This is Olive. I want to make it. All right. I want to show you just that actually you understand. A retiree can learn one. He wrote Masetan. Not 1, 2, 3 exclamation marks. See the strong emphasis. Masetan. No regret coming. Very grateful. Very thankful. Retiree. Now, take a look at this Lee Chun Long. I wish I come in earlier. Those younger than me, you should come. Same age as me, you know his skill, don't come. Those older than me, I don't know why he still don't come. I'm 21 years old. This gentleman is only 21, no, and yet he is really late. I don't know whether you're older than 21 or younger than 21. If you're older than 21, you're even later. For him, he's already late. In fact, I'm quite envious of him. Why? Because when I'm serious, I already way past this age. So this gentleman has a lot of potential. And according to him, this one no-brainer. You should come on. Of course, some people say, hey, this fellow is a newbie, it's a greenhorn, he know nothing. I'm in the market for so long already. Now, let's take a look at this gentleman. His name is William Bock. William Bock happens to be a prop trader. A prop trader is a proprietary trader. All right, a professional trader in the broking firm. They trade with no commission, but they have to share the profit with the house. And this person has been a prop trader for 17 years before he attended my workshop. And when he attended my workshop, he actually wrote this, must attend. Now, if my workshop is good enough for a professional, is it good enough for you? I'm sure it does now. Huh? Now, let's take a look at this gentleman. Look at his face. Do you think he's a local or foreigners? This is a Caucasian. He's an American. His name is Sean Ring. Sean Ring happens to be a chartered financial analyst trainer. He trains people to take the exam. All right? And you need this qualification before you can become an analyst. Before that, he was vice president of Credit Suisse. By anybody's standard, this is an expert, right? Is it? Yes. But experts still attend my course. And after attending the course, he wrote this. I wish I was taught 10 years ago. I said, my God, this fella is an expert and he's a CFA trader. He said he's late by 10 years. A lot of people say we must attend the Amor class. No, the Amor attend my class. This is not the only Amor. This is a Norwegian. This one is a French guy, and this is a British. There are 4 Amor in the class. So I told you I have students from all over the world. And those places I've never been before. So most of the person after attending, they have all regretted not coming earlier. When I say regret, it's really regret. And the last one literally scream. This one. And this one happens to be a remisier somehow. No. A lot of people think that he should know. He screamed. He must have actually been very frustrated as a remisier trading the market. A lot of people attend webinars, seminars, they always give you money back guarantee. I don't do such thing because that is sales scheming. It's not right to do, so I don't do such thing. But I give you a different kind of guarantee. I guarantee after you finish the workshop, right, you regret not coming earlier. And this regret is more painful. Much more painful. All right, so I experienced mastering explosive swing. Your investment, 2,398. Now you think about it, it's only $200 a month. As a trader, as an investor, 200 cannot be too much, seriously. Because you pay a lot more for your commission. You pay a lot more in terms of losses, a lot more. 200 is nothing. If you think about it, think a bit deeper, it's a meal a day. It's just like you branch your friend, a meal a day. Cannot be too much to invest in your own personal well-being, your financial well-being. How can that be too much, isn't it? All right, let me just recap your investment 2,398, and it comes with a guarantee, regret not attending earlier. Good or great, or designed to help you. Huh? Now, take note of these 3 days because these 3 days will totally transform the way you see the market. On the 25th, first day, we're going to do the fundamentals. I'm going to teach you the market cycle. I'm going to teach you the characteristics of a sideways market. I'm going to teach you the characteristics of a running market. You must understand the difference. All right? This is very important, and yet it is only foundational. On the second day, I'm going to teach you the setup, the fourth setup. If you understand the setup, you understand the breakout. All right? A lot of people don't understand. They want to use all sorts of funny indicators. Don't need. And this is where you get precise entry price before the market open. Good or great? Okay, all to help you. On the last day, it's going to be a full day. I'm going to teach you how to trade, manage. No point having a strong stop. No point if you don't know how to manage. Because a lot of people still got problem. Tendency to take quick profit, so your profit cannot be big. Now, if you have a list of stock to look, I will help you to shortlist it, which is the best, rank them 1, 2, 3, 4, improving the odds. All right, I'm going to teach you how to identify which one better. There's a list of 10 stocks, which one better? I'm going to teach you. All right. So this is very important. All right. This last day, extremely important. In fact, it's more important than this. All right. You must know how to find a champion stock, but you know how to manage it or not. That's important. All this is to make your portfolio magical. So suddenly your portfolio become very light, not weighed down by losses. Okay. Now at this juncture, some people will say this, but CK, there are so many educators out there. I also don't know whether a strategy is suitable for me. I also don't know whether I also don't know whether about support. I can understand this. I only can show you what other student has actually mentioned. Now, this is Jervis Lau. 10 years ago, Jervis wrote this. The only course in Singapore, they provide so much support to make sure you get back your course fee. Get back your course fees. All right. Now, take a look what I wrote here. The arrows at the time he mentioned it is coaching and it's debrief. He told us a lot of times, set triple alert and must monitor this stock. When trigger alert, really just follow setup and just buy in. Really thankful to have joined HHR and learn from CK. So you notice I repeat, the report said so, the video said so, the posting said so. I repeat and repeat and repeat. If you still miss, there's nothing much I can do already. I already helped you a lot already. And this is what the students say. The only cost. Fast forward. This is Zentan. Although I attended other courses elsewhere, CK is the only one that provide the good support after course. Only one. There are a lot of, I can understand, but this is the only one. Take a look what I wrote here. Kudos to the delegation all this year. This is referring to the video, the coaching I do consistently over the last 16 years. Got hired as a trader. Whatever I teach you got commercial value, no? You got hired as a trader, no? Really thankful, and I'm very happy. And these are the things that inspire me to help my students fast forward. This is Jimmy Yap. I won first money my Chinese Asia Talk Challenge. Thanks CK Cost. And this one is the TV grab, the video grab the student sent to me. This is my student, make $10,000. Champion, Channel News Asia. All right. And I'm very happy for him. You take a look. I'm wondering whether I could meet up. He insists on buying me lunch. He wants to actually come and buy me lunch. He brought me to the hotel and eat lunch. And I'm very happy for him. And he's very busy. He's a lawyer, no? Very busy, no? But still can do that. So don't think about busy, no time. Nobody saved best than the recent batch of students. All right. His name is Ng Yao Te. Must attend course, even borrow money from loan shark to attend. According to Mr. This is non-negotiable. This one must attend. Even you have to borrow money, you need to attend. Now, he actually emphasized this when he actually reached, he came with a white pay for both. Now, all these students has in the past made a simple decision. They decided to be the 5% they are successful. They decided to be the 5% that do not gamble. They decided to be the 5% that win. In order to win the race, you have to start the race. You don't have to be great to start, but you need to start to be great. And all you need to do today is to decide. Decide that you want to be successful. Nothing happened until you decide, no. I can see a lot of people in the market, but they have not decided yet. That's the reason why they continue to contribute. But once you decide you want to be a successful investor, a successful trader, a lot of things to change. Your mind become very clear and you feel very settled and you experience the inner stillness within you and everything seems aligned to support you. And when I say everything seems to align, is a lot. Why? Because right now, Master Exposition Program, listed price 2,398, but you don't need to pay this. Why? I have good news for you. The program, not too long ago, has been recognized by IBF, accredited by IBF. And what's the implication? IBS will fund a large portion of the cost. If you're a Singapore citizen and PR, you got 50% funding. You only pay half price plus GST, 1,298. Good or great? All designed to help you. If you're a Singapore citizen above 40 years, you have 70% funding. They are prepared to absorb 70%. You only pay 858. And not only this, if you still got SkillsFuture credit, you can use the SkillsFuture credit to pay for this. Now, this is not just a SkillsFuture program. This is an IBF program. You got sponsorship and you can use your SkillsFuture to make payment. In short, means what? The government want you to be a better investor. They want you to attend this program. A lot of people lose too much money in the market without any understanding. All right, is this good or great? All designed to help you. All you need to do is to just take out a handphone and scan this. If it happens to be the computer, most convenient, use this link. Now, Cybercore has just posted this link. Use this link, all right, and click. You will come to this form. Just complete this form. Very simple. Select, there's only one course there, all right? Only one course there. Fill your name, email, citizen, Singapore, permanent resident, and an IC number. They need to verify contact number, date of birth. That's all. Very simple. Okay. All right. And then after you have finished everything, if you're using SkillsFuture, click SkillsFuture and press submit. That's all. The rest, Cybercourts will contact you. All right. Click submit. Complete the registration form and click SkillsFuture here. If you have SkillsFuture to make the payments, and then you click submit. You will receive an auto-generated email from Cybercode, which encloses your registration form. Okay? That registration form in PDF is important when you submit to SkillsFuture, but that one secondary first. Huh? Anybody has any questions? Anything that you need me to clarify? Anybody? The common question people always ask, what's the difference between your course and another program? A lot of people always ask this because they don't want to duplicate what they have learned before. I only can share with you what my students actually has feedback. This is Peter Boo, and Peter Boo wrote this, finally a teacher that teaches how to enter and exit from training, something not taught at other training center. Now, I have no idea what other training center come up. Now, this person used the word finally. Why would a person use the word finally? Then we have been searching. He has been searching for a long while. There's the reason why he used the word finally. He discovered us. But he must have spent a lot of money already. A teacher that teaches now, something not taught at other trainers. So that is a key difference. Taught, everybody can talk. In support, after so many years, I still do the kind of support to help the student. All right, and this is very crucial because we understand the 3 days course is not going to make you a master. You need continuous support. That is important. So I do this video every week for the students so they see. Now I just show you. Last week only. Last week video I just show you. Is this week a good week for you? A lot of people don't know what they're doing. All right, and they're just gambling the market and they're very confused. Okay, and they're wondering why like that. Things do not have to be complicating. Don't make things complicating. A lot of people think complicating is sophistication. It's not. Sophistication is not. It's not something that we are interested in. We want to make it as simple as possible, easy to use, more importantly, practical. A lot of people input too many things, and then what happened was that they go nowhere. So this is the key difference. This is what a lot of students actually mentioned. And again, this is quite recent. So it's not just only student in the past. This is quite recent, 2021, which I attended 10 years earlier. Now, I don't want to see you 10 years later because 10 years later, probably I retire already. Okay? All right. And there was this gentleman who actually have similar experience. And they actually mentioned, all right, excellent, especially the mindset, especially the mindset. Earliest schedule, this is the earliest we have, no? All right, this is the earliest we have. Are you able for this Cheng? Are you able to make it for this particular coming one? Because actually it is just coming soon. This is September. Now we already end of August. Because I don't have anything earlier. All right. The class course we have is in July. So the next one is in September. All right. So hope that the schedule work for you. Okay. Anybody else has any other questions? And this student actually mentioned here, no? This is not found. Notice, enrich key concept. This is not found in many seminars and webinars that I've attended. The trainer gave new meaning and insight to the things we have learned in the past, which may not be correct. That's serious, isn't it? Is that serious? So this has been experienced. Now remember, a person will not be able to say this unless he attended some courses, right? And if I'm not wrong, this person has attended 5 courses, no? Attended 5 courses. Okay. Anybody else has any more questions? Try to take this opportunity because I noticed some of the people in the room has actually came here a few times. If you came here a few times, something is troubling you, no? Because otherwise you won't come back, right? Something must be troubling you. Something must be annoying. Okay. I know you're looking for breakthrough. And I mentioned before that this may well be the course that will transform the way you see the market. Transform the way you see the market. And I have a lot of experience with people who were just thinking that this is not a good time. I have. And what happened was there were individuals who came back years later and then regretted they should have done it earlier. They will get distracted and they actually lose more money. They already lost enough money and they continue to lose money. And finally, they decided that something is not right. Right? But at that time, by the time they actually come back again, they actually lost more money. So I always tell people, if you're serious about it, take this opportunity. More important right now, who is handling your risk? Everybody knows. Sometimes we hesitate to do things because of what? Fear. Fear of the risk of failure, risk that makes decision may be wrong. But what if somebody take over the risk? In this case, the government take over the risk. Would that be great? Yes. What's your risk? Negligible or maybe nothing. The government take over the risk. We are taking over the risk. All right. We are handling your risk. Would that be great? Yes. And this is not something you're going to come by easily because eventually the subsidies, the sponsor may be removed. All right. It's not going to be there all the time. So maybe remove. All right. So I'd like to actually hang on for another maybe 5-10 minutes. If you have any questions, please take this opportunity to actually post in the chats. I'll try my best to answer your questions. So this is what the other posting which I did. All right. And this is like for example, in this case here, chit chat. All right. I have students do the posting. All right. Like for example, Singapore NISTI, 10-year treasury yield. All right. And this is how we discuss the bank. And this is NVIDIA. This is where I discuss. Okay. And even things like this, I post Singapore and Malaysia. So the exchange rate, a lot of people don't understand. So I post this and I told them, okay, I told them, this is a bearish sign, no? This is the best time for you to exchange ringgit there. If you go to Malaysia, that is the best time, no? Okay, that is the best time, no? Because if not, take a look at what happened right now. So these are things actually, if you know, right, it make a lot of difference. This is, yeah, can you see that? It plunge. Behavior is the same as stock. All right. If you can read this, you're able to take advantage. And this is exactly what I was telling. All right. Despite the break of the lower channel, security appear to be holding. What is now required is a catalyst to trigger the move. All right. Intervention by Negara or firm decision interest rate cut by this Fed. It will strengthen ringgit. And this is what we are seeing right now. So the way you exchange, not so good. It will break down further, meaning you're going to strengthen against Sing dollar. Okay. Now, student discuss OCBC, UOB. These are the stock we traded. Okay. SPH, a lot of people don't believe this is where we trade SPH. Take a look when I first post that time here. All right. A lot of people don't believe that this stock can run. So I did that posting to help. Okay. But a lot of people didn't trade SPH. Is it correct? Ask yourself, do you trade SPH? Keppel Corp. Brent crude. Yes. So we discuss everything under the sun. All right. US Chinese yen as well. AAM is gone. Right? You post it. So there are sometimes concern. A lot of students have weak ears. They have not internalized what I've taught them. So I sometimes get very worried. I will do posting and I will tell them what they need to do. All right. I give you a very simple example. Alibaba. And I tell them, please don't buy. Just because Charlie Munger go and buy, you go and buy. I say, no. Can you see this? I post here. One long passage here. Not likely to let up soon. All right. It is better to be fearful and patiently wait for the market to. So I tell them, please don't buy. And the resistance is 186. Don't buy. I told them, I warned them because there are too many people who say, stocks are rife, that it is good to pick up a bargain, particularly the big tech like Alibaba. I said, no. And I told them, when was that? 2021 August, no. It was resistant at 186. Does anybody know what happens to Alibaba now? 186 to 100. Anybody know? Still struggling, $79. So this is something very important. Right? Once you actually know how to trade, things become very light. Otherwise, it's very heavy. All right. And the worst still is that you don't know what kind of information to filter through. You have seen the chart before, no? You have seen all these charts before. But you cannot see the hidden message. And that is the key thing. Okay. Once you can see, you're wondering why you can't see earlier. Okay. Now, we'll hang out for another 1-2 minutes or so. And after that, we'll close. But if you have any questions, take this opportunity to actually get it off your chest. If you wish to contact us, just take note of these contact numbers. You may want to take a photo of this. This is the number. Press option 1, will go straight to Eddie Tan mobile phone. If you wish to write to Eddie or Justin, here are their email address. Remember, end of the day, there's only 3 things that count. The thoughts you think, the image you visualize, and the action you take. Only 3 things. I don't care what you want to do well. Anything, including investing in the market. 3 things. The thoughts you think, the image you visualize, action you take. 3 things. And the market action is also very simple. Buy, sell, and hold. 3 only. Simple, but not easy. And if you get it right, you're okay. If you get it wrong, the losses can be quite huge. So again, once you know, you're wondering why the rest of the students will say, I regret not knowing earlier. And that is the reason why we are so passionate in what we do. We want to make sure that eventually the right information, the right knowledge filter down to the people who want to benefit from it. And right now, there's no better time. Why? With government help. This is a rare opportunity. During my time, there's no such things. We got to pay a lot to learn. And I learned from Americans, pay heavily for it, the tuition fees. All right, and right now, we have government's support. Government is throwing a lifeline. It's very much like a story about the man who got drowned, right? He was stranded on a rooftop and boat came by. He said, no, God will help me. Motorboat came by. He said, no, God will help me. Helicopter come by. He said, God will help me. Eventually got drowned. And he was very angry with God. Isn't that the story? God said, I sang all these things, but you didn't want to help. Right? There's nothing much you can do. Same thing right now. This is the best time. I had never think of any other times. At this time last year, the student paid 2,004. This time last year, the student paid 2,004. Right? But you right now, with the help of IBFs, you pay minimal. Use your SkillsFuture, you pay nothing. Okay? All this is possible and it's happening right now. Okay? Now, if there's no further questions, we will close the meeting shortly. But if you have, take this opportunity before we actually close it off. Remember, ultimately, end of the day, nothing will happen until you decide to make it happen. Huh? We are only here as a coach. Just press the QR code for the last time. All right, the link you can use the most convenient, or you can use your handphone and just scan this QR code. In the form, very straightforward. There's only one date. Fill in the details. Over here, if you are using SkillsFuture, click SkillsFuture button and then click Submit. All right, if there's no further questions, we'll end the meetings. And I look forward to seeing you real soon in our coming workshop.